following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your favorite choice, your favorite bi-weekly choice, I should say, for all of your options need-to-know info right now. Some education, some analysis, some unusual activity, maybe some listener mail, and throw it all in a big cauldron, stir it up, you add in a cherry of some pure, utter nonsense that we like to sprinkle on top, and you have what we call the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as from this here Options Insider Radio Network. And we are recording this today. All of you who ask for the dates, I sometimes forget, but we are recording this today, December 30th, which is, of course, means this is our final show of the year, final show of 2013. You'll be hearing this on New Year's Eve day. So hope you enjoy this final episode of 2013. We have many more in the can. Don't worry, coming down the pike, lots of great stuff in store for next year. But this is our final show for this year. So we thought we'd take this opportunity to maybe look into our crystal ball a little bit, talk about what we may be seeing, what we would like to see in the coming year from an options perspective, and of course, we'll give you guys a chance to sound off as well. Joining me for this prediction/wish fulfillment final episode of 2013, we have the usual cast of characters, starting off with the man beaming in from the great state of Maine, although he may be booted out soon because he has only one ice skate. He is none other than Mr. Andrew Giovinazzi of OptionPit.com, a.k.a. The Rock Lobster. Mr. Lobster, welcome back to the program, sir.
Thank you for having me. I can't believe. One of the last days of the year. I feel I'm doing this show instead of Mark. I guess I'm moving up in the world.
I love how you've been doing this show for a while now, and every time I toss it to you, you sound surprised.
I know. I'm trying to keep it fresh for you.
It's that unique style you have, sir. Certainly you own it.
Unfortunately, I do not have a voice made for radio like you do.
You have a little bit of that Maine lilt getting in there now, so it makes you distinctive.
I'll start dropping my R's here anytime soon now.
All right, and also joining us from the great state of OX, he is none other than the Viceroy, a.k.a. Mr. Alex Jacobson, the major domo of education over there at Options Express. Alex, welcome back to this final show of 2013, sir.
Hey, Mark. Good to be here.
We can tell you're back at OXHQ because the connection quality is not as thick and lustrous as it was on the last episode. We got to get you recording from Casa Jacobson more often, sir.
Yeah, I'm in full agreement. But it's good to be here. Last show of the year. Going out on a high note, almost everything near the highs with the exception of gold. And it's like I looked away from the screen for a couple days, and last time I looked, gold was 1,300. Today it's in the 11s. Like, what did I miss for a couple days here? But anyway, good to be here today.
All right. And last but certainly not least on the old panel today, beaming in from the heartland of this country, the motherland, if you will, a.k.a. scenic and lovely St. Charles, Illinois. He is none other than Uncle Mike Tusaw from RCM Asset Management. Uncle Mike, welcome to this final program of 2013.
Oh, it's always bittersweet at the end of the year. We got to say goodbye to a great year of 2013, but it's always exciting to see what we're going to have next year.
And speaking of what's in store for next year, it's time to keep on rolling right on into the trading block.
The trading block.
All right, and welcome to the trading block. This is usually the portion of the show where we break down what's trading, what's moving in the old markets. I could do that for you if you like today, listeners. Not a whole heck of a lot to parse. Most of the major indices essentially unched on the day. Vol creeping up a little bit, but that's really about the only activity going on today. So what we're going to do instead today is mix it up for this final show of 2013 and talk a little bit. Well, no, we did on episode 300, we looked back on the esteemed history of this fine program. So we thought, what better thing to do with this episode than to look forward into 2013 and talk a little bit about some of the things we're hopeful for, some of the things we are maybe predicting, and go out on a limb a little bit, and all kinds of fun stuff. So you can look back a year from now and really laugh at us at how bad we messed it all up. And guys, I will get the old ball rolling to give you guys some time to collect your thoughts. Maybe I'll start in the wishes category to get one of those out of the way first, and then we'll keep rolling. You know, there was a lot of hype going into this year, 2013, on one product in particular, and that was, of course, the minis. Mini Apple in particular. Of course, they have minis on other products, but Mini Apple was really the central focus, and there was a lot of drum beating, a lot of hyperbole leading up to the launch of these things. They finally launch in March. And what happened was pretty much a resounding meh, as I like to say on this show, in that it really was kind of it showed many of the underlying issues going on in the options market right now. It shows how risk averse a lot of the participants in the options market are right now, that a product that was so hyped and so focused upon when it finally launched could really just come out with such a whimper. Of course, the minis really weren't what anyone really wanted them to be. People were hoping they were going to be the product that was going to kickstart the retail rush back into the options market. They're going to make products like Apple, Amazon, Priceline, Google, all these very premium priced stocks more attractive to the retail customer who can't afford a round lot in those underlyings quite often. It just made a lot of sense. And of course, as we talked about on the show many times, the execution was deeply flawed. We had all the issues around the fact that just commissions alone, they were priced like a full ticket. And if you wanted to mix minis and regulars, you had to pay 2 tickets again. People were complaining it's a 1/10 size contract. Why isn't there a reduced commission? A lot of mixed messaging, a lot of errors and issues on that side of the fence. Of course, getting even worse into it was the fact that liquidity providers wanted no part of these things. It really was a wait-and-see game that they were playing in terms of watching these products list and then seeing, well, if people come to them, then we'll start really quoting them aggressively and tighten up those markets. The problem is if you don't quote them aggressively to begin with, no one's going to come to them. So what we had was not only a product where you were paying full boat commissions for a 1/10 size contract and mixed ticket charges and all those issues, but also to get in and out of these things, the transaction costs in terms of slippage were just enormous. You were paying much, much wider spreads than you were paying in the big contracts. That's been fixed to a degree in a lot of the products. They're not as atrocious, the spreads, as they were earlier in the year. But if I have one wish kicking off 2014 is that we can finally get these things right. And that's going to take a lot of effort on a lot of people's parts. It's going to take the brokers to really get in line. It's going to take the market makers and exchanges really getting out there and incentivizing people to make markets in these things and actually start trading them, because they should be lighting up the tape. These things should be a home run. And yet, for all the issues I just described, they really aren't. So hopefully the brokers will get their acts together, the exchanges will get their acts together, the trading firms will get their acts together. Everyone will come together and say, you know what, this is a product that really needs to have our attention. It really needs to have our support behind it, because it can translate into a whole new class of characters coming in to the options market and trading this product. And that's a good thing for everybody on this show and beyond. So hopefully my first wish will be that this industry finally gets those products right. Mr. Andrew, I'm guessing your first wish for, you can do a prediction too, you can mix it up, whatever you like. I'm going to guess your first one's going to fall somewhere in the VIX area. Am I off base?
Well, a prediction, maybe. I think we might test the volatility all-time low in the VIX this year. Maybe 1 or 2 days. I think we'll see the VIX print into the single digit sometime in the spring, between now and springtime. That's
you're jumping in on one of mine where I go ahead later and say pretty much there's no vol until spring. that was my corollary to yours, really. But yeah, I wholeheartely concur with that. Maybe I don't know if it's single digits, but it'll certainly be pretty tepid in the vol department.
Well, yeah, I mean it doesn't go. It's single digit meaning 9.90, not 3.
It could be 10.01. Just hovering.
That's the It's if we keep going, it's the biggest threat feels like interest rates, maybe skyrocketing, but, there still doesn't feel like there's like enough inflation or demand. I mean, there's still the whole QE thing, I believe, is still a mixed bag as far as how successful it's been. I mean, obviously it's been good for stocks because they're making all-time highs. But how this gets unfolded, unrolled, however you want to describe it, that's I think that's the big unknown for me as far as, what brings the market down. I mean, what brought us down the last time was a financial collapse, and because people were over-levered, and they're not over-levered now. The U.S. government is, but, normally the problems come from where you don't see them. So those guys being the ones that are the most levered, that most likely will be where the problem comes from. Now, to the extent they can manage it and, improve the deficit picture and stuff like that, then that becomes less of a problem. So you got global growth and blah, 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 blah. So it's hard to see what that problem will be, but I think there will be some continued giddiness, and that will drive volatility potentially just to that low level where the market just doesn't do a whole lot. Sloughs around.
So as we record this, the VIX cash hovering at 13.56. So about a 30% drop we need to really see VIX cash get into that single-digit territory over the next few months. And I certainly agree. I don't see anything in the near future that's really going to inject a whole heck of a lot of vol into the system, at least on the expected side. There could always be another crisis in Europe or something else like that, the Middle East, that injects some juice into the marketplace between now and March, but really not until we have the next big taper debate and government debate, fiscal debate, I should say, that really do we see anything on the horizon that can even remotely juice up these markets again. So sorry, all of our diehard premium sellers out there in the audience, you guys are going to have a rough couple of months if what Andrew and I are thinking it comes even remotely to pass. So yeah, maybe we just turned off a whole good section of our audience there, Andrew.
Well, I mean, but you could still sell premium and win. It's just you're not getting a whole lot for it.
Exactly. Then you really got to do stuff.
Right. Then you might be scrambling a little bit. You'll be hitting the idea how hard for whatever juice is jumping.
I like
and
it.
I think
I like it.
And that's individual names. I think are going to be kind of more of the movie for the next year as opposed to like the big indexes. You have these crazy returns for the big index. It's hard for them to do that 2 years in a row, although it's not unheard of. But individual names are where kind of I think that opportunity will be.
So this year is this year is the year of the monkey. Next year is the year of the stock picker. That's what you're saying. The monkey can beat anybody this year.
Exactly. But I think next year you're going to have to pick some good stocks.
Speaking of Idea Hub and picking good names, Mr. Alex, with your Skype issues hopefully behind us, what are you looking at for 2014? Predictions, wishes, maybe a little bit of both?
Well, I have limitations on the predictions I can make in terms of markets.
Just me and you and Andrew, Alex, and Mike. Nobody else is really listening to this thing.
Yeah, and 430 Schwab compliance people sitting in San Francisco. Vol will go lower. Vol will get into single digits. I mean, I grew up when Vol was 7 and 8. So is that possible? I think more 8, 9. Prediction I made this year that I was dead wrong on. More consolidation in the brokerage community, and I think the failure of minis points to how the business has evolved and and some of the problems with the business with payment and maker taker. And I think maker taker needs to get adjusted. I think that will change the equation. Another forecast is if the 10-year gets up to the 4 area, you will see a price war in the e-commerce discount community. And that will be both a good thing and a bad thing because it will take out some of the smaller players that I think are going to go away. But I think once again, you'll see a circa 2000 change in what it costs to trade. I mean, prior to 2000, it was much more expensive to trade. And now we're down into the dollar and change, some places 75 cents, 60 cents. No one makes a great deal of money from trading. The money is from payment or the big houses that internalize. Now, let me frame that correctly. Not necessarily the big houses, but the big shops that are internalization engines. And I think they're the ones most susceptible to having the urge to consolidate this year. I mean, the folks that are for sale are still for sale. But I think we'll have a good market this year. I think the Fed will wean us off the punch bowl a bit. And, we're surviving $1,100 in gold and 3% on the 10-year. I think we'll survive 330, 340 on the 10-year, and that's different than what I thought at the beginning of the year. I think it's going to get challenging up in the 4 area, but in the 4 area, I think investors will be happy with what they see in terms of trading costs, because I think at that point it becomes a knockdown, drag out, and the little money you make in trading will be offset by what you make in spread and short stock interest. So in that sense, it will be an interesting year. My two big wishes are that they bring electronic trading into the options on the big SPU, because that changes the whole equation. I'm not sure why the CME keeps dragging its feet there. And cash-settled equity options. I think that also changes the equation. But those are wish lists. I don't know that we'll see those this year.
I like the cash settled. That would be something. I think a lot of our listeners could probably get behind that, too. Why have all the Sturm and Drang around underlying and getting it in and out of the account? It just seems to be a needless abstraction for so many people at this point, you know?
Yeah, see, the problem is even the small exchanges and the new entrants can't change that because the board at OCC it's kind of like the General Assembly. You know, one person throws their arms up and says no, and it's no. And that's kind of unfortunate. So maybe another wish list I'd add is OCC changes its charter and turns the board into some type of majority or even 2/3 votes. Of course, as soon as I said that, I realized the Senate couldn't make that work, so I doubt the OCC board will make that work.
Well, if the language coming out of the SEC recently is any indication, there's going to be big changes afoot for OCC in 2014, I think whether they want to or not. So it could be interesting stuff cooking over there. Maybe not cash-settled equity options, but some other types of changes afoot over there in OCC land. You know, he said something else, Alex, that made me think it might be a good discussion topic for us on a future show. And of course, you mentioned things like payment and all the other issues and which firms internalize and stuff. And, you know, a lot of that stuff is kind of old hat to us here on the show. But for a lot of our listeners, that stuff could be relatively new and maybe even a bit surprising. Maybe it might be an interesting discussion to have on an upcoming episode deep into 2014 sometime, discussing the life cycle of a trade from when the typical end user clicks the mouse button on their 10 lot to what actually goes on between when that trade is clicked and when it's executed and all the different mechanisms that are at work. You guys can talk about what Schwab does and OX and things like that. I think that actually would be very fascinating, I think, for a lot of our listeners to actually kind of see what goes on behind the scenes. Interesting stuff.
Yeah, sounds like a great idea.
All right. Next up on our 2014 wish/prediction list, we have good old Uncle Mike Tusaw. I'm going to go out on a crazy limb here, listeners. I'm just going to say I haven't talked to my minions, I haven't talked to my birdies. I'm just going to say his prediction/wish may lie somewhere in the realm of Apple or gold. He may surprise us. He may go broad index. I don't know, but I'm gonna throw my irons in those fires. Uncle Mike Tusaw, am I right or am I horribly wrong?
Well, I'm bearish on corn. I want to do a straddle on coffee, and well, just kidding. Yeah, your minions are somewhat right, but what color are the minions today? That kind of has a lot to do with it.
Got to go purple, baby.
Okay, got it. That's scary. So a couple things. I think that the Fed Bernanke did a pretty good job of not making it too abrupt that they're going to taper, but yet in reality, it doesn't really sound like much of a taper based on his last meeting, and that he said even if the unemployment rate is less than 6.5%, they still would have a very accommodative policy. So with that and everything that they're talking about, going down $10 billion a month in buying assets or in creating or in adding to their balance sheet doesn't really seem like much of a taper to me when you think of it. Yeah, it's something, but with it, it seems to me that the printing press is still going to continue. So I think that with that in mind and with lower volatility, I'm saying a year from right now, SPX is going to be around 2,200. I think we're going to have another big year. I think that there's reasons for the market to go up and there's reasons for the market to go down, and I think we're just going to continue to ride up the momentum. Now, with that being said, when you have a raging bull market, as I'm predicting that we will continue to have, it's one thing to just throw your blinders on and buy a bunch of stock, but I think it's another thing if we do continue to have lower volatility, and if we do go into the single digits to the 7 or the 8 level, then this is just a dream market for buying calls. Or if you have a bunch of money that's in stocks, you can buy puts to hedge it, and it really doesn't cost that much. This is a great market for being a premium buyer, and I think that's going to be the way with which to go in 2014 in one way, shape, or form. Now, as I've said before, if you are a degenerate premium seller, there is still hope for you, so to speak. You have to be more active in doing that, but let's not forget about our good friend, the calendar spread. You can do things if you're willing to do stuff. Now, in terms of some other things with which I follow, I think the metals are going to do one of two things: go up or go down. In the short term, and by short term, I'm talking over the course of the next 12 months, I'm straddleish. I don't know what the term is for that, but I'm very straddleish on both gold and silver, and I'll be adjusting positions as such. My long-term sentiment still remains the same on both the metals. I am bullish for the long term on them, but over the course of the next year, I think that we're at a key point with gold, for example, in that we're touching the lows that we made a couple months ago again, especially after the down day today. And with that, if we break them, it could be a pretty rough year in the gold department. On the flip side, you could also make the argument that this is the double bottom we've been waiting for, and it's off to the races. Who knows? So with that, on the metals, I'm very straddleish, meaning I really don't see them staying the same one way or another. In terms of Apple, I think that Apple's going to be a unique beast in that we're going to have a hard time getting too far past the 600 level in the near term. I'm going to reserve too much judgment on Apple until after the earnings come out, and I think one of the earnings tomorrow. Is that correct, Mark?
That's what my purple minions are telling me.
Got it. Okay, so we'll wait till tomorrow for the earnings on Apple to determine what that is. But on a serious note, in a few weeks when Apple does have earnings, I think that'll give us a better indication of what's going on with them. They had a little bit of euphoria in terms of the buying with China Mobile, but they really didn't make any new highs after that announcement. So I don't know if I'm necessarily seeing Apple at the 800 level a year from now. So I'm not quite as bullish with Apple as I am on the market as a whole. So with that, in terms of my wish list of what I'd like to see happen over the course of the next year, I'd like to see something along the lines of, I'd like to see the SPY, the the 1,000 stock contract or the 1,000 lot contract or whatever. I don't even know what you call the thing. I'd like to see a little bit more volume in that. If we get some more volume, I'd like to trade it, quite frankly. But it's not there right now, so I'm not messing with it. On the flip side, you could say, well, how about trading SPX? Well, with that, a lot of my clients are in IRAs, and so it's not quite as clean and easy to do as an SPY, very narrowly spreaded, electronically traded product would be. Now, once again, that's my wish list, and I'm not holding my breath on that one for too long. In terms of the minis, I like the concept of it. It really doesn't fit too much with what I do for my clients. I'm to say that I never use them would not be telling the truth, but it's very rare that I do have a need for them. But I would like to see it happen for the retail public. I think it would be a good thing, and it would be a way with which people could play Apple or play some of the bigger names without taking on a whole lot of risk. And I'd say that's pretty much it for the upcoming year. Oh, the other part of my wish list is that the college playoff system, I hope it becomes legitimate next year, as it is until they have playoffs in college football. It's just hard for me to stomach the way that they do the bowl games. That is all.
Well, I will concur wholeheartedly with that. That's one of the reasons why I tuned out of college football a long time ago. I can't stand random rankings. That just makes no sense to me. But that's a focus for another day, perhaps our upcoming options and sports show. Coming soon to a podcast provider near you. But I like it, Uncle Mike. You coined some new terms for the new year. Straddleish. I like it. Might be a good term. You might have to adopt that here.
When I was at OX, we actually had a contest. We wanted to come up with a term that could define straddleish for our marketing team. Now, this is back in the Lou Friedman days, but no one could come up with anything that would make it we wanted to invent a new word for the marketplace, and we could not come up with a word for straddleish. You had bullish, bearish. You can say neutral, but we wanted to come up with a more interesting term. We tried various animals, but we couldn't come up with anything. So if anyone has anything, I'd love to hear it.
Uncle Mike Tusaw in 2014, feeling straddleish. I like it. So just to recap then, you're going to be buying straddles and SLV and GLD and writing the hell out of the 600 strike in Apple. Did I have that right?
It sounds about something like that. I don't know. Have a hunch, trade a bunch, whatever.
Of course, if 700 million potential new Chinese customers can't push it above 600, what on the horizon is really going to do that?
Just want to interject. Speaking of Chinese customers, Shanghai announced today they are beginning to test their systems for trading equity options. So that changes the equation.
Yeah, that'll be very interesting. We've been keeping an eye on that. A lot of partners that we work with obviously are heading over to China to investigate that, and we've been approached a couple different times about how we could expand Insider over to that market. Obviously, we have a presence there now, but people really have to jump through hoops to get our stuff over there. None of it is translated, obviously, so they really have to be, very fluent in English. Usually that's focused heavily on the mainland and not too much in the hinterlands there of China. So we are looking at that pretty aggressively. But we do have a couple partners who are active over there now, and I've heard some interesting things just comparing and contrasting the retail audiences in the two countries. The U.S. active retail audience tends to lean towards the premium selling side of the equation. We've seen things like weeklies and other new products really being solely adopted by the premium selling crowd. And what we've seen, at least from the little dabbling I've done and seen in the Chinese retail audience, that it is almost the polar opposite. It's almost more like the futures retail audience because they buy. And they buy a lot of premium. And I was talking to someone recently about why they thought that was, and they were much more fluent on the Chinese culture than I am. And they were saying that essentially that stems from their culture being very much a very strong gambling culture over there. And so buying premium, particularly all the things we make fun of on this show, loading up out of the money calls and swinging for the fences, that's very much the nature of the beast over there. So it'll be interesting to see what this influx potentially of a large amount of Chinese retail into the listed marketplace, how that will impact the products we're talking about going forward. So good point, Alex. A big potential game changer lurking in April there for 2014 from an options perspective.
Yeah, in the heyday of the OEX, back when it traded 1 million contracts a day, you had more retail coming out of Hong Kong. In terms of where the clients lived, you had more retail coming out of Hong Kong than you had coming out of New York City. So to your point, it's the appetite for risk and also the concentration of wealth wealth is very, very concentrated in that part of the world. But it's going to be interesting to see when Shanghai actually goes live. Right now, they're just testing. The appetite for U.S. options internationally, especially in the parts of Asia I got to visit. I mean, the biggest institutional customers I ever met trading U.S. equity options were in Asia, larger than any of the hedge funds here. And to your point again, Mark, it was just the way they looked at risk.
Yeah, it'll be fascinating to see how that unfolds in a couple of months. Probably one of the biggest potential developments lurking on the horizon from an options perspective. And now, since Andrew so ruthlessly trod upon my first prediction of vol, I'll move on perhaps to another wish I have for 2014. In addition to all the great things you guys have already thrown into the pot there, one of the issues we've continuously harped on this show for the past year, and hopefully this will go away. I don't know if it will anytime soon, but hopefully we'll start making some improvements in this area, is, of course, just the nature of spread execution in the options market right now. You know, we talk about how things have improved, spreads, execution, MBBO, all these things. And they are great if you're trading single leg trades. I mean, you can hit an MBO, you can pretty much get, for most retail customers, get as many as you want done on any particular spread. What's a little more difficult, and what the problem is a lot of even listeners of this show who are trading 10 lots, 20 lots, 50 lots, even those guys are starting to encounter. They try to do even simple spreads, simple two-legged, maybe even three-legged spreads. All of a sudden they start encountering that issue where the MBBO is essentially meaningless. And that gets into all the things we've discussed on this show in the past about multiple spread books being siloed across various exchanges. Of course, this maybe is also a part of the topic we'll discuss on our What Happens When You Hit the Trade Button episode of this show. But essentially, you have so many spread books. Exchanges are all for-profit public entities. They're all being paid. They're all getting transaction taxes. There's a lot of interest at play on that order, so they have a vested interest to not send that order away to be executed. So that's, of course, gumming up the works. The spread books don't talk to each other. We've seen some cool developments out of a few exchanges like ISE doing things like the implied order, which when it has an order lighting up and something else in the book that could match it, it kind of helps to mix and match those orders a little bit faster. But, of course, that's only on their own spread book. That's not talking to, let's say, SIBO or BATS or anything else. That's really just limited to their own exchange. So it looks like, and we've had a lot of conversations on our Options Insider radio program talking to the heads of the exchanges and brokerage firms and things about this particular issue, and everyone seems to come down that, they hope it doesn't have to be regulatory that really makes this change happen. Of course, the exchanges can't really talk to each other about this, so maybe it has to be the 10,000-foot solution. But a lot of people really seem to be leaning in the camp that it's the order aggregators who could really make this happen. They have all the orders coming through their systems anyway. They could match them up a lot faster and much more seamlessly than a lot of other participants could. Of course, there might be some issues not wanting to take on the delta risk of taking a leg of a spread without having the other side done. I certainly understand that, but we need to get over that impasse here, because there's a lot of business we're leaving on the sidelines, or we're actually just frankly just disencouraging here in the options market, because people are being brought up the right way. They're learning that the options market is deep and liquid. They can hit bids and lift offers on the MBBO, get their trades done, and then they expect that same level of functionality when they do what we want them to do, which was graduate to trading spreads, which is a good thing. And all of a sudden they get to spreads and they can't get those trades done. And that's when we get the emails. I'm sure, Alex, you guys at OX get this call and email on a daily basis. I'm sure Andrew, your clients, and even Uncle Mike, your clients over there are emailing you and calling you. Why am I not done? The MBBO is here. I'm lifting through the MBBO. I'm selling through the MBBO. Why can't I get this? Why isn't my spread done? So hopefully my wish to boil it down is to maybe make some more concrete progress in that area. I've heard a lot of different solutions. No one's really taken the leap. Maybe some of the aggregators will step up, and we'll have less of these complaints coming in about how come I can't get my 10 lot done in whatever X spread they're trying to do because of these antiquated systems that we have in place here in the options market. So that would be my big probably wish list for 2013. Now, Mr. Andrew, I know you're excited about all those 700 million plus potential new Chinese retail customers. Of course, if they're all buying premium, sounds like they're great candidates for new customers for your book, How to Buy Free Juice. You must be very excited.
I am. And actually, we've been approached a couple times about taking our gold class and sort of, translating it to Chinese. So, and we have we have several Chinese national clients, and we're trying to see if we have the time, but it definitely would be using some of our students that have gone through our classes that want to actually go teach what we do in China. So it's I think it's a good development. I'd love to be able to kind of get it going. But as we say, it's on our business development list for 2014. Let's put it that way.
So we've been going for quite a while here on predictions. So let's give one last prediction and/or wish, Mr. Andrew.
Oh, geez. One last wish. Just my biggest wish is that we have sane fiscal policy. That's all I want. We get that. I think everything else takes care of itself.
This is not Magic Fairy Fantasyland, sir. I don't know what show you're thinking.
I'm sorry, you said wish, and I started to think, wish.
I think we'll get spreads fixed a heck of a lot sooner than we'll get what you're talking about. All right. And Alex, I'm assuming you pretty much did your whole list. Anything else you want to wrap up with here for 2014?
Yeah, don't muck with the options don't muck with the taxes on options. There's all this discussion about mark to market, 1256 going away. There's all kinds of thoughts and proposals, and don't muck with the taxes and keep your hands off 1256.
I heartily concur with that one, sir. If they start some of these very, very disturbing proposals, make it out of committee and actually onto the floor, it could be discouraging times for everyone involved in all segments of the financial markets, not just options. All right, Mr. Tusaw, take us home. One final wish / prediction for 2014.
Well, those are tough to beat in terms of sane fiscal policy and not mucking with 1256. So I will say that my prediction, my wish for 2014 is that we just have, I guess this is kind of along the lines of sane fiscal policy, that the re-elections that occur within the Congress and Senate are friendly to our business.
Again, not magical fairyland, sir. I don't know.
I know.
I don't know what world you're in. It's not Disney Princess Land either, sir. I'm sorry. All right. And we could keep going here, listeners, with so many more predictions and wishes for 2014. But we got to keep on rolling with the show. So it is time, once again, for the Viceroy to put on his fancy hat, because it is time for the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, this is the portion of the show where Mr. Viceroy, a.k.a. Alex, gets to take the reins. I take a bit of a rest, give my nice voice a little bit of a rest, and let Mr. Alex take us through the deep, dark vaults behind the scenes over there at Options Express. Mr. Alex, I'm guessing, given all the movement of late, you guys had some love on OX for Twitter the last few sessions. Would I be way out of line with my guess?
Yeah, Twitter's been the only name lighting up the tape the last couple of days. And other than that, it's really been fairly quiet trading for the last few days. There was some activity in Priceline. Priceline obviously had a big move today, and there's been a lot of kind of end-of-year, what I'll call adjusting in some of the triple-digit names. Names we don't talk about a lot, but names like Win and the Netflixes and the Paneras, kind of the areas where you'd hope that the minis would have expanded and gotten traction to. But talk to the futures desk today. They weren't doing a lot of gold. They weren't doing a lot of energy. It really sounds like folks have kind of pushed away from the table for the last few days here. Not a lot of volatility in anything. Even volatility in the futures energy complex is just, the skew is to the put side, not the call side, which is kind of surprising. But a quiet day overall. As I say, I survey the desks. I do this kind of what's going on today a few minutes before the show starts. And just not a lot happening right now. A very quiet day today.
I know you're very, very fixated on the 1256 issues. I'm sure some of our listeners are still kind of confused about that. Why don't you do a quick overview on what you mean by that and what some of your concerns are, what people should know going into the end of the year here about 1256?
Well, first of all, 1256 comes out of the mixed straddle law about 20 years ago. And 1256 are contracts like the SPX, the NDX, the GLD. Andrew, is the VIX 1256? The VIX itself?
That's a good question. I don't have an answer for that.
So 1256 contracts. For example, the SPX is, the Spider isn't. Why? It's a whole other show, another day. But 1256 contracts give you 60-40 tax treatment. So no matter how long you hold the contract, they're 60% long-term, 40% short-term, and they have to be marked to the market on the last trading day of the year. So there are two proposals kicking around Washington. One was marked to the market for every option contract. Obviously, that's not something we're happy about. And the elimination of the 60-40 treatment, the 1256 treatment. So those are things to have on the radar for next year. But if you are trading 1256 contracts, keep in mind tomorrow at the close of business, the print, the final print is going to be a recognizable gain or loss and is going to reset the contract. So please be aware of that. And if you need to do some tax harvesting, if you've got big gains in 1256, you're going to recognize the gain even if you don't sell the contract. I know that's a very nasty present on a terrific year like this year when the SPX is up almost 30%. The good news, though, not that losses are ever good news, is if you have losses are effective of the trade date, not the settlement date. So if you're going to have 1256 gains tomorrow and you have got something that's sitting with a loss in it, offset them. And I don't want to say you'll have tax-free profits, but you'll get some offset. If you're not familiar with 1256, and if my brief explanation has made it worse for you, go out to the internet and search IRS Form 550 and look at the 1256 section. And if you are trading the SPXs or the GLDs or things like that, be aware you're going to have 1256 treatment.
All right. Thank you for that, Alex. Another topic we could probably spend a whole episode diving into the reasons behind and the origins of, but perhaps best saved for another episode while we keep on rolling right on into our final mail block of 2013.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, welcome to the mail block. And some of you may be asking, hey, why no odd block today? Why no other stuff? And that's because I know a lot of you have just been sending in great questions. A lot of you wanted to send in stuff for the 300th episode, and we've just been so deluged with great questions, we haven't had a chance to get to all of them. And some of you guys have been waiting for quite a while, waiting very patiently to have your questions answered. So I want to make sure we don't close out the year without at least giving you guys a chance to have your voices heard and your questions answered here on the show. We can always get to our look at that 2013 in review for the odd block and some of that kind of stuff maybe in the next couple of episodes. We're going to kick things off here with Jason Cruz. Comes to us on Twitter. He's been one of the guys who's been waiting for a while. He writes in, at Options, thought about a strategy of maxing out margin to buy a lot and then selling a deepish, he gets a two-saw-esque word, deepish, in the money covered call. Is there a name for that? Or have you guys talked about something like that where I can get a better idea of the risks? You know, it's interesting. When I first read this really quickly, I was thinking he meant maxing out the margin to buy a lot of out-of-the-money calls and then selling a deep in-the-money kind of call against it. So essentially it would be like a short stock almost with a long out-of-the-money kind of call ratio kicker. But looking at this again now that I read it again here on the show, it sounds really like he's saying he just wants to buy a ton of stock and then sell a deep in the money covered call. Is that what you guys are taking from this question as well, or am I just completely misreading it?
That is what I take. It sounds like he just wants to have like a giant synthetic put going on the whole,
Yeah, that's far less exciting than I was thinking. I was thinking he was talking, when I first saw it, I was like, oh, he wants to have a kind of a short stock, kind of a hedge short stock kicker ratio thing. But this is just, you're buying a lot of stock and writing it in the money call.
So I could actually rewrite my wish at the end of the year, because when my clients ask me like, what do you think of this trade, or what do you think of this, can I make it better? And it always helps if you just kind of write down the exact trade you're thinking of. That way we don't have to try to figure it out. Although it makes good radio, if you want an answer, you should say, I want to do this and then do this. Am I thinking about this screwy or not? And then we could actually, you might get some value out of all the old people here.
You're right, Andrew. If you do this one-to-one, this is just essentially a synthetic short put. So, Jason, if you want to save some money and also have a good idea of the risks, then just look at what we've talked about many times of using a naked short put as a way to enter into a long equity position. It's a great way to actually get paid for working a limit order on a stock. And then if it turns around, you can always do some fun wheels and some other fun stuff to get out of that stock if you have to. If you're talking about maxing out your margin to buy a lot of stock, I don't know really why you would want to do that. I mean, remember we talked on this show in the past about doing things like getting rid of the stock altogether, swapping that in for a longer term, 6 month or a year in the money leap. And now you're talking about a much better capital efficiency. And then also all the things we talked about in the show in the past. You have the Greeks in your favor now. So you have an underlying, instead of having underlying, which really has none of the other Greeks except for Delta, now you have a long premium position. So as underlying drops, which is the worst case scenario in a long equity position, then of course you have Vega kicking in to offset some of the losses. You have your Delta getting lower as it drops. So that's going to offset some of your losses. So for all the reasons we've described on the show in the past, I would switch this up a little bit, and maybe he is talking about maxing out margin to buy a lot of in-the-money calls. Maybe the restrictions of Twitter didn't let him get that far. I don't know. But it sounds like he's talking about buying a lot of stock and then writing in-the-money calls against it, which I don't know why he's got to buy a lot of stock. That part loses me. I would much rather see him talk about doing what we talked about before, maybe legging into some the calendars or diagonals, using in-the-money options instead. And then if you want to write other maybe calendar in the money options, that gets a whole lot of more bang for the buck than just buying a bunch of stock. But if you are going to buy stock and write covered calls, particularly in this environment, it probably makes sense to think about options in the put wing, aka in the money covered calls. We were just talking about the top of the show. Vol is pretty low, probably going to be drifting lower in the near term. Not a lot of places really that are very juicy for premium writing. So if you want to get a little bit extra bang for your buck, and again, you're okay having your underlying being called away, which is probably what's going to happen in this scenario, then in the money covered calls are probably the place you want to go. A little bit extra bang for your buck. Take advantage of that put premium while it's there, It doesn't, and as we said many times on the show, if your stock is called away, that can be a good thing. Uncle Mike, anything to add here for our friend Jason Cruz?
You guys have said it all as per usual.
Wow.
I'm shocked.
From the strategy doctor, I don't know what to say. Again, the end of the year for me, all these highlights, I don't even know what to do with myself.
Alex, anything to add there, or should we keep on rolling?
Just no good conversation ever starts with maxing out margin.
Yeah, that makes me a little nervous. I do have to agree.
That was the one thing I didn't like that. I didn't like that either, Alex. I have to be honest with you. That was a little freaky for me.
That's code for swing for the fences.
So much could go wrong.
You're just not having a positive attitude, Alex. Come on.
You just made Schwab compliance very happy, Alex.
Yeah, I tell you what. Even at the SIBO, we used to have a saying that trading on minimum margin is an indication of I need to clean this up, but minimum common sense. So. Oh, yeah, don't max out margin. Anytime you run an account to zero SMA, I understand you got a deep call, which, by the way, is probably going to be instantly exercised. And what you're going to have there is a perpetual motion machine generating commissions for your broker. So not fond of the entire scenario.
Perpetual motion machine. I love it. I love it, Alex. Good stuff. All right. Next up, we have a comment that came in. When we talked last episode there, Andrew, maybe 2 episodes ago, about all those crazy combo swaps in Hero. And we were like, what the hell is going on out here? People picked that up on Twitter and really ran with it. It got retweeted all over the place, all that activity. And someone wrote in, this was Gary Barisi, and he writes, he just wrote in and said, that much action because they got a $50 million insurance claim. So that was his little guesstimate as to why someone was loading up on size combos out there in Hero. I agree with you, Gary. It doesn't make a heck of a lot of sense putting that much action to work to reap whatever rewards a $50 million insurance claim. I went through Hero again just before the show to see if any news had come out, and there was nothing. So maybe he's right. Maybe that's what it was. Or maybe someone really does love their broker. Talking about perpetual motion machines to feed the broker. That's truly a good one. So thanks for that.
It was awesome, I have to admit.
Yeah, that was crazy. That's still up there. And granted, it's very recent, but it's up there for my highlight of just pure inanity and insanity of the year. All right, next up, we have a question. We touched on this a little bit before, but people keep writing in about it, so clearly they're confused. It's a question from this is Jack, Mr. I Trump Doom, and he writes, the subject of his question is option block front or back. And he writes, apologize if this has been covered in the last year and I missed it. In dealing with ratio vertical spreads, will you please explain what makes a front spread front and a back spread back? Thanks. We've hit on this. We've hit on the differences in the show in the past. I've said many times on this show, Jack, that I have no idea what the etymology of those terms, if they do exist, and I'm sure they do. Maybe Alex would know. He goes deep into the primordial ooze of options, well beyond us. Perhaps maybe not Andrew, but well beyond Tusa and I. So maybe he knows the etymology of these a little better. But yeah, whatever it was, it has long since been lost. It's really just a term. I really don't even use it. It's kind of an arcane terminology now. I know Andrew used to like to throw around front spread and back spread every now and then. I just say ratio and pretty much maybe non-ratio. I don't really use a term for the other.
Well, I do, because why I do that is because I want to make sure that everybody understands about the net contract count. Your back spread, you always have positive net contracts, which means at minimum, you're long one. If you're front spread, you're net short contracts. So at minimum, you're short one. So from a risk point of view, from a trading point of view, from almost any point of view that I've been acquainted with since I started trading, the difference between being long a contract and short a contract is pretty darn big. So it's important for people to realize a ratio back spread has a different intent than a ratio front spread. And the reason is because on the back spread, you're long contracts, and on the front spread, you're short contracts.
But back doesn't imply, short and front, vice versa. They're just terms that have been slapped on them, at least in the popular trading vernacular, when most people, at least the people listening to this show, who are premium harvesters, most of them, 98% of them, when they say ratio, they mean 1/2, 1/3, So you say ratio to them, they're going to know they're net short contracts. And if you say reverse ratio to them, that actually means, okay, I'm going to be the other way. I'm going to be 3/1 or 3/2. I think that is more intuitive for a lot of people. Maybe you disagree, but I kind of lean that way instead.
Yeah, what I've always said is just pretty much like what Andrew said. If you're in a back spread, then that means you're buying more than you're selling. If you're in a front spread, you're selling more than you're buying.
It's just like an orange. An orange is orange. A back spread, you own the juice. I don't know what else to tell you. That's how it is, and you got
an orange is orange. Why don't you get this, Mr. I Trump Doom? An orange is orange.
Alex, come at us with I Trump Doom as a handle, you're going to get the oranges and orange speech.
Alex, save us. What is the etymology of these deeply lost terms?
Okay, we don't have enough time, but I actually know the guy who named all this stuff, and he traded on the floor of the SIBO for a long time. He is regrettably gone, passed away a few years ago. But here's the piece of advice I would give you. Be careful how you use the language, because you just heard the possibility of confusion, and especially in like training people or seminars or things like that, somebody will raise their hand and say, I have a back spread on in Priceline. And I learned long ago to say, okay, let's stop for a minute, because not everybody in the room knows what that means. Tell us what you have. And then they'll describe something that's a butterfly and not a back spread, because they just have the language wrong. So just be clear that before you toss around the language, not everybody, regrettably, uses the same terms for the same things all the time. So sometimes you got to explain your trade.
Alex, somehow I knew that you would know the guy. I just knew. That's why we love having Alex on the show.
That goes back to the thing I said before, which is if you're asking us a question, give us the exact trade. Just like you write up a ticket.
Yeah, that's so important. It's
size, volume, everything.
Right.
Just do it how you should do it.
When I came here to Options Express, they use language differently than I had been taught in 35 years. So just to Andrew's point, describe the trade. Don't throw around what we used to call delta speak. That's like when a customer comes up to you and says, well, I'm delta neutral. And you go, slow down for a second. Tell me what you're trying to do. That's probably the one most misunderstood issue is people will throw their hands up or people will send in emails. Or I'll tell you about a call I got the other day. If we won't have time. But, someone says, well, I'm delta neutral. And you say, okay, let's pause for a minute. What are you expecting to happen? And they give you sort of this blank stare and go, I thought delta neutral was enough. And you say, okay, what's your objective here? Because let's not just throw around the delta speak. Let's talk about what we're trying to do, what the ratio is, what the strike prices are, because it isn't always uniform. And if you go to Asia or other parts of the country, other parts of the world, it isn't used uniformly.
Yeah, if I can amend my wishes, maybe one more wish of 2014 is we can maybe get past some of the impenetrable terminology that seems to really keep people out of the options market. Things like this, front spread, back spread, the origins are lost in the sands of time. I know some people have made attempts in the past at getting rid of all the terminology like butterfly and iron condors and trying to make things more direct. Maybe we can all move to that as an industry, make it a little bit easier for people who have hard times, and obviously a lot of people still do, with terms like these. Unfortunately, that's all the time we have. Everyone else who wrote in, don't worry, we'll keep getting to your questions and keep cranking through the backlog. If you'd like to make your voice heard along with your fellow listeners, a lot of great ways to do that. More of you taking us up on Facebook, facebook.com/theoptionsinsider. A lot of you like to use Twitter, twitter.com/options. Easy way to find us there. Of course, you can find us the old-fashioned way. Post a comment on the website, on the show notes, or, of course, send us an email, questions@theoptionsinsider.com. I think we had all different areas covered today on the show. And that's really all the time we have for this look ahead for 2014. But since we're looking ahead anyway, let's check in with each of our cohorts to see what they have cooking in the new year that may interest you. Starting off with you, Uncle Mike Tusa, what is cooking in the land of RCM Asset Management?
Tune in on Monday to the Option Block. January 6th, we'll have the January schedule for our webinars. We're excited. So tune in. It will be revealed in due time.
The big tease is finally coming to fruition. Many people have been waiting for that, and now we'll finally see what great webinars lie in store for us when the RCM webinar train pulls into a station near you. Next up, Mr. G, a.k.a. the Rock Lobster. What's cooking for the pit in 2014?
Again, we're expanding, changing our service around a little bit to make it more accessible. You'll hear about those changes. We've been working on it for a while. But that hopefully will be announced within a month. The next thing is on January 25th, we're doing a bear market trading strategy webinar, Mark and I. It's about 2 hours. It actually costs money. But anybody that is interested in learning basically, how to manage your equity portfolio through a bear market. And maybe we won't have one next year. Who knows? But the idea is to help people get some control over what they're doing. And I think, you want to learn how the options work. So that's what we're going to teach you.
The Option Pit, teaching you how the options work. That's a new tagline for you guys. I like it. I think you can go with that.
It's not too bad.
All right. And last but not least, take us home, Mr. Alex. What's cooking on the horizon for OX in 2014?
So we're all going out to get our Chinese phrase books. Grigas just yelled at me that he was delta neutral and he didn't know what it meant. So one event, January 2nd, just showcase one last one. Walk Limit And to all the questions about not getting good execution in spreads or not getting execution at all in spreads, walk limit is a tool that has kind of changed the way people trade. I expect all of our competition will have a variant of it in 2014. The only other thing I'm looking forward to is New Year's, and hope all the listeners have a safe and happy New Year.
Indeed. And on behalf of Alex and Andrew and Mike, and of course myself, we want to thank all of you guys for tuning in and really propelling the option block to new heights in 2013. And we'll see you back in here one more time. And we'll see you back here in 2014 for more exciting episodes of the option block.
Become a part of the option block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.